hello there, XMC followers, customers, and anybody interested in what we're calling XMC Expert Moments. And today, I'm excited to have a special guest, CJ Blankenship, with the Blankenship CPA firm, top 10 national firm in Nashville, specifically focusing on tax audits, accounting, consulting, and really spread out through the geography there, not only in Nashville, but Brentwood, Dixon, Goodlettsville, Mount Juliet. We're excited to be a partner for Blankenship, and excited to have the managing partner, CJ Blankenship, on this morning. CJ, welcome to the show.
Thank you, Sean. It's good to see you this morning.
Absolutely. Great to see you. Hey, listen, I want to just jump right in if I can. Could you give me, I know you're a local Nashville guy, Belmont grad, also understand you're a National Merit Scholar, which makes you and I very similar in nature, because I happen to have friends that were National Merit Scholars. So tell us a little bit about your journey to where you are today, if you don't mind.
Absolutely. Well, again, Sean, good to be here. And, my journey to today has been one that originally was pre-med at Vanderbilt. Didn't think I was going to be an accountant, and God had a different plan. And I found myself about close to 15 years ago or so taking over as the managing partner of Blankenship CPA Group. Been a great journey. We've grown from about 20 or so people at that time to over 100, served just thousands and thousands of wonderful clients and businesses all around Nashville and the Southeast, and even across the U.S. and some international. So it's been a wonderful ride.
Well, I think you and I actually got to know each other early on when I came to Nashville in 2005. It's been that long. So we've a couple years later established a good relationship, and it's been really exciting to watch your business grow and to support you through that growth process. So, CJ, let's face it, interesting times right now, and I think your vertical is one that can provide a lot of knowledge and background based on what's happening today. I know when we look around, we see businesses that are looking for help. We see individuals that are also looking for some direction. So let's just take the business concept for a second. What are you seeing from businesses, and where is their greatest need for knowledge right now?
Absolutely, Sean. What we're seeing with businesses and their greatest need for knowledge right now is, I would say, put it into two categories. The first is just maybe liquidity and sustainability during this period. And then the second is utilization of all these benefits that are out there. Right now we have some businesses that are really having the best, candidly, months they've ever had in their entire existence, because their service offerings happen to fall in play with what we're experiencing right now with quarantine and stay-at-home orders, et cetera. So they're doing great. But then we have just hundreds, maybe even 1,000 businesses that are finding themselves just in most perilous times, whether they're forced to shut their doors completely, or they're in partial revenue mode, having to lay off individuals. It's been really, really challenging. So that has created its own set of circumstances that business owners are having to tackle. On top of that, the second thing really is, in light of those situations, especially the latter of the two, what our business owners are finding themselves in is, what can we take advantage of when it comes to the government stimulus that we've seen over the course of the last couple of weeks, which is really unprecedented, given the amount of just trillions and trillions of dollars. There's been 3 bills thus far. There's a 4th in process right now. All those things together are creating just amazing potential to continue to take care of employees. And one of the things we're talking to our clients about, which I think you got to listen in on this week, is just making sure you have the right perspective to sustain through this period that lies ahead, and then come out and be successful on the back end.
Fantastic. And I want to take a little deep dive into a couple of those for business and individuals. But first, probably one of the most simplest things that I think we all understand, but we don't really know where we may fit, is the change in tax filing deadlines. So as a business or individual, how would I best determine what's best for me?
That's a great question. If you're in a situation as an individual to get a refund, potentially, which the vast majority of Americans do, going ahead and filing that return and getting that money today versus the new date of July 15th could be a very logical approach. On the other hand, with businesses, you still want to probably get it done because, as we've said forever, an extension of time to file is not an extension of time to pay. And that is the case today. The difference is that this extension of time to file and pay, normally due dates, particularly this due date was 4/15 for corporations and individuals. That's the one that got extended to 7/15, along with some other payment provisions as well. So it's an odd situation where, for once, there is an extension. It's not a normal extension, but it is both for payment as well as filing. A lot of businesses, that 3/15 deadline did not get moved, and so all the accountants were rushing doing our normal business work for all the pass-through entities, which is really, in Tennessee especially, that's generally the right business structure to utilize. And so we just have that literally over a couple thousand 1065 flow-through entities that we work with. So those were still due on 3/15. So a lot of those were extended given what was going on and or filed. So important to keep in mind, extension of time to file, but not pay. And so those 7/15 payments are still going to be due.
Good information. So let's move to this, what they're terming the Coronavirus Aid, Relief, and Economic Security Act, known as CARES. So that's a whole lot of words there. That was signed into law March the 27th. So there's been a rush, obviously, from business owners to determine eligibility associated with that, and I think that is in full motion currently. As a business owner, what are the couple questions I need to ensure I answer to determine next steps in eligibility?
Absolutely. So the Paycheck Protection Program is a program that is designed in order to let business owners sustain their payroll and operations during the course of this period. And so if I'm asking myself as a business owner, what is it that I need to make sure that I am eligible for this program? The first thing and the most important assertion, there's lots of assertions that are part of this, and you have to certify several things. And the stakes are pretty high. It's about a $250,000 fine and either 5 or 10 years in prison. Any time in prison is a bad thing, Sean. So you want to make sure that you're being really careful about making appropriate representations around this Paycheck Protection Program, the Triple P as I refer to it. And so when you're coming to the Triple P, the first and most important is this a situation where I'm actually experiencing economic uncertainty that makes the Triple P loan necessary? So if you can't certify that, then you really can't go into the process to apply for the Triple P loan. Most businesses can say that, even businesses that are doing well right now. There is a lot of economic uncertainty out there. But particularly important is this is really designed for businesses that are experiencing that economic uncertainty and need these funds to continue to retain and employ employees during this period. But it's an amazing program. It's an amazing program, Sean.
Fantastic. So I know there's been a rush, and the recommendation is if you're eligible and you meet that criteria of being in need, that you apply as soon as possible. Are we starting to get any feedback on turnaround times for those loans being processed and people beginning to feel that relief?
That's great. When it comes to turnaround time and actual processing of these loans, and one of the things we called it was Pamplona for the bankers. It was like a running of the bulls, because ultimately there was this the apportionments for this from Congress were $349 billion. Economists said that the demand was somewhere around about $1.2 trillion, maybe even more than that. And so there was a proverbial run on the banks, especially during the first week of this. And over the course of that, there was a lot of concern that these funds would dry up within just a couple of days. And the good news is they have not. They're still being processed. A lot of that is because the big banks are pretty slow to roll out. And you layer on top of that just a huge amount of guidelines and uncertainty around the process from the SBA. Because if you keep in mind, people forget that really within 1 week of the passing of the law, this is unprecedented for government to move this fast. They were up and running and had a program functional where banks were able to obtain SBA numbers for these loans in less than a week. I mean, we're talking about really 4 business days to make this happen. And so, one of the things we've urged our customers and our clients to understand when working with their banks is to be patient and work through the process, work with your bank, first of all. And if your bank's not doing it, then of course, ask for a referral and go from there. But really the primary function is to work with your bank to get through the PPP loan process. Your bank is the gatekeeper. So at the end of the day, we want to do what your particular bank says in order to be able to get through that loan process. So that mad rush transpired, but the funds are still being placed at this point. So meaning that they're being committed through the SBA loan process with that number being assigned. And we have customers, certain banks, many of our clients are actually getting money. As of the first one that I was familiar with was a Wednesday morning funding. The money was wired and in the business's bank account. And those are continuing to transpire yesterday, day before. So over the last 3 days, those wires have been processed, and some small ones and then some really big ones as well. So the funds are starting to flow.
So just to clarify, I can, as long as it is a lender that's SBA approved, I can reach out to any of those banking institutions, correct? And they can provide that type of relief.
That's absolutely right, Sean. So when considering which banks are eligible for this, the question to ask really is not so much if the bank is SBA approved or preferred lender, but if they have gone through the certification program with the SBA and the Fed. Because basically this program, instead of just running through SBA banks, was opened up to most all FDIC insured institutions, including certain savings and loans. So they really opened up intentionally this program to be as accessible as possible to as many businesses as they could. And so this activating of all these other different institutions that normally would not be SBA approved was a big undertaking and just a mass exposure to businesses across America.
Fantastic. So in the first wave, it sounds like when you read the bill itself, that this predominantly applied to organizations with 500 employees or less. And so it left outside of the Boeings and the Deltas of the world, you had a lot of organizations that were caught in the middle, and we've seen a lot of those organizations furlough workers. Just recently this week, there was some talk and discussion at Congress about providing additional relief for those organizations that have more than 500 employees. Are you aware of any updates in that area?
Absolutely. So regarding businesses with more than 500 employees, you've got a couple things that are at play. One is if your NAICS code is a 72 starting point, you're in a little different world, basically. As long as you have less than 500 employees at location, you might be eligible for the PPP. The other aspect, we've had several clients of ours that had more than 500 employees, but their NAICS classification for the average with the SBA was actually a average number of employees that was higher than that. So let's say the NAICS code associated with that particular business, maybe the average employees are 1,200. Well, if they're less than that 1,200, they would still be eligible for the PPP. And so there's some great, you need to double check with certain businesses that are over 500. That would be my first thought. The second thing that's available for these businesses with more than 500 is what I kind of referred to as the controversial funds. If you remember the CARES Act, as it was trying to make its way through the Senate, there was a lot of argument going on. And a lot of that dealt with this $500 billion allotment. Keep in mind, PPP is $349 right now. This $500 billion, which is even more allotment, has been made available to a variety of different industries, including certain government sectors, et cetera, but also employers with more than 500, and I believe the number is less than 10,000 employees. And so there's some direct assistance. These are more of a loan type program. There's going to be some grant association that comes out with that. Thus far, there's not been a lot of guidance around exactly how that's going to transpire, other than the early arguments in Congress, which ultimately got resolved, and around accountability around those funds for those organizations. So a lot of concerns around those $500 billion really just being a blank check, and that's the way it was originally written, to where Treasury could pretty much do what they wanted with those funds to organizations they saw fit. Those types of organizations that were qualified were narrowed down, and then also some accountability around the utilization of those funds was added in. So there is some benefits that are out there for those more than 500. Some of the other things to think about too are two sort of consolation prizes we talk about. Now, generally, if you're in the PPP program and or receive forgiveness in the PPP program, you're not going to be eligible for these other two. But one is the employee retention. So if you have quarter over quarter loss in comparison with the prior year of 50% less revenue than you had in the prior period, then you would find yourself eligible for those employees that you retain, despite experiencing that 50% decrease in revenue, of 50% of up to $10,000 credit. So basically that calculates to a $5,000 per employee credit for those employees that are retained. And so that's one. The second consolation prize is the potential of deferring your payroll taxes, assuming, of course, non-participation and forgiveness in the Triple P program, to defer those payroll taxes to make a payment at the end of this year and the next. So that is a pretty significant deferral of payroll taxes.
Fantastic. Well, if we can, let's just move over to the individual for just a moment, because there's obviously a lot of discussion as to what eligibility looks like there. And let's just start with the elephant in the room. There's a lot of workers, unemployment. The unemployment statistics over the last couple of weeks have been pretty astounding and unprecedented. But if a worker is furloughed, how, with this extra $600 payment, how is unemployment calculated for that particular worker, although it varies by state, right?
It does vary by state. That's right, Sean. So when considering unemployment, and particularly the expansion of that unemployment under this pandemic unemployment act that was part of the CARES Act, it's important to consider that this is an extra $600 that was layered on top of whatever the state pays. So, for instance, Tennessee, the max is about $275 a week. And so you add that $600 a week on top of that, that's $875. So if an employee is completely unemployed, they would receive that $875. It has to be COVID-19 related. They have to have a self-certification process to achieve that. But then if they're partially employed, so let's just say they worked, half the week. And let's just say their comp during that half of the week was $500. So they're partially employed. So what they would do is report that $500 they received to the state, and then they would receive a check for the net $375 in that scenario differential.
Understood. So this $600, should furloughed employees expect to see that in the same check they're receiving their unemployment for? Does that come separately?
That's a great question. So it's administered, the extra $600 is administered by the state, but it's from the federal government. So the states have been a little bit behind on this. I'm not aware of any furloughed employees getting the full dollar amount yet. It's still being integrated. I would not be surprised if there ends up being kind of a catch-up process that happens where somebody might get 3 or 4 weeks of that money at one time. We'll see what happens with the states. Every state's a little bit different, but keep in mind the states administer this process. And so you got to go through the state unemployment process, file that claim, and then make sure you're keeping up with not only that certification for COVID-19 on the front end, but that continual reporting process. Because if somebody fails to report, the state will shut down those funds.
And eligibility for anyone begins for any out-of-work participants beginning the date the bill was signed, March 27th. Is that correct? That's
my understanding. So I have to be honest with you, Sean. I have not spent my career talking about unemployment insurance. Candidly, the extent of our discussions around unemployment are usually try to make sure your employees don't file for it so your rates don't change. But that is a different world today. Now this is really part of the toolkit that we talk about as something to utilize in order to potentially make sure that your business survives. The old saying is, if you're on a plane, not a lot of us are flying these days, but is to put your oxygen mask on first before you put the oxygen mask on your traveling companion that maybe is younger or needs some help. And that's really the case with businesses today. It is imperative that the businesses do take care of themselves before they take care of their employees, because they need to survive. They need to be here on the back end of things. And so the good news is, though, is once we get our oxygen masks on the business, there are now a lot of tools, unemployment being one of those, that we can help our employees with. Some of the others are the FFCRA credits, which are pretty significant.
Understood. And I think one of the questions that a lot of businesses may be looking at, furloughed employees, is how do I support those employees from an insurance perspective moving forward? Because they are not unemployed, so they're still eligible for benefits. But when do you draw the line? And once you do that, obviously COBRA kicks in, which is not economically appealing, right? Financially. So what are you recommending to businesses when looking at how to make those decisions built around providing those benefits?
Absolutely. The continuation of benefits prior to COBRA being enacted, is really an issue that is business specific. It really depends on the funds and the liquidity of the business. And so again, you've really got to take care of the business first. So if it gets to the point to where, basically we're paying for, we talk about margin a lot in our consulting work, is there positive margin coming out of this decision? And so obviously that is just a straight negative margin situation. It's costing us money. We're getting no associated revenue with it. And so you really have to consider and balance that taking care of the employees with keeping the oxygen mask on the business itself. And so that period really is going to be based on the liquidity and the cash availability, as well as the overall margins of the business itself.
Fantastic. Let's move over to the stimulus, the one-time stimulus that people are eligible for depending upon earnings. Is that process is expected to, recently was announced, expected to hit the particularly bank accounts for those that have filed electronically first. Do you have any updates on when, depending upon how someone filed or how they're filing, will that determine how quickly they get their benefit and for how much possibly?
So if an individual is looking for that rebate check, and this is similar to what we've experienced back during the Great Recession, and they're looking for that rebate check, the person that's going to get it fastest is the individual that has the bank account information already on file with the IRS. And so Treasury talked about putting a widget on the website. I have to be honest, we've been so busy with the PPP, I haven't even looked at that, to where an individual could update that bank account information directly through irs.gov. It's important that if somebody does look into that, they need to make sure it's not a fraudulent website.
Understood. And last question on the individual front, you mentioned for businesses you have the employee retention credit, also the payroll tax deferment. From an individual standpoint, there are some things they can take advantage of as well, but obviously you want to have full due diligence before you execute on some of these, but really built around rebates, potential retirement withdrawals without penalty, some charitable giving. Anything we need to wrap up there that's helpful?
Absolutely. The biggest thing, honestly, Sean, that individuals have available to them beyond the rebates is this access to retirement funds without having penalties, and potentially, if they're not able to put the monies back in, to spread that income tax burden over a 3-year period. And so, one of the things that we talk about, though, it's hard to get money into a retirement account. It's really easy to get it out. And basically what's happened here is the IRS has made it even easier to get out. And so we do caution our clients to be able, because those are qualified funds, they're asset protected at a creditor level from the federal government. You layer on top of that, obviously, great tax attributes of growing income tax free, and depending on the nature of the funds themselves, potentially being paid out either with deferral or completely income tax free if those are Roth type funds and we pay tax on the front end. So it's hard to get money into those, super easy to get out. And so for somebody that does find themselves in a really bad spot, now they can access them without paying the 10% penalty. And then they do have the ability over the next 3 years to go ahead and put those funds back in. If they don't get the funds back in, then they do pick that income up over a 3-year period ratably. So a great benefit for those who are really in the roughest of spot, but we do want to caution against, tapping those funds, because it really is hard to get them back in, even though we have the ability to do so. Candidly, when we see people touch those retirement funds, generally they have a rough time getting them back in. In that scenario that they do, though, it's just treated like a normal qualified rollover, 60-day rule, and basically like in that qualified rollover perspective, they do not pick up the income taxes on it.
Final couple questions here. First of all, you guys, I know are really being proactive in this. You're doing some e-learning initiatives that people can participate in to increase their knowledge. Can you talk about just anything Blankenship is offering in that regard and those programs, and can they go to your website for more information?
Absolutely, Sean. So when we're thinking about tools to be able to provide our clients, we've actually kind of opened it up and offered a little bit more than we normally would to folks who are non-clients, because really this is just an unprecedented time. And so we really want to try and lean in and help any business owner, any individual. And so on our website, if you go to bcps.com And under news, you'll find just a variety of very in-depth articles that were written by our consulting team that deal with FFCRA, which is a big deal that a lot of people aren't talking about, and that deal with the CARES Act and the PPP process. Right now, we have an interview on there with Larry, who is our senior consultant inside of the firm, spent his entire career in baking, a great little 30-minute interview with him. It's a in-depth analysis training. This was an internal training snippet that we did on the CARES Act. So this is built for CPAs, so it's a little bit technical. But if someone is wanting to apply for the PPP, this is a great thing to look through. If you read that article that is on that page as well, watch that video, any business owner is going to be prepared to be able to go through the PPP process. And that PPP process, the reason why there's so much demand on it is because this is a loan that is based off of 2.5 times your prior year average monthly payroll costs. And then you have the opportunity to have that loan forgiven to the degree that you spend it on payroll costs and certain other qualified expenditures such as rent and utilities, things of that nature. So it's a really, really special situation. And that forgiveness is actually income tax free. It's unprecedented. We've never seen anything like this. And so that is why there's been such a run on the banks and why so many business owners really, if they can make those certifications, they need to go after this PPP loan.
Well, fantastic. You know, CJ, I think in closing, one of the things I've always admired about you and Blankenship is your heart for the community, your heart for service. I know that that's always been something that is important, and this obviously demonstrates that as well. You know, you, for example, got involved pretty significant in an organization you structured called the Christian Recovery Houses, and serve on many other faith-based boards as well. Do you have any words of encouragement for businesses out there that are looking to be, more involved in the community and helping others during this time?
Absolutely, Sean. So when we think about our involvement in the community, not only when it comes to the firm's involvement, we've worked with over 300 different not-for-profits as our actual clients. And so we get the opportunity to spend time with them, to serve them in various ways. But one of the other things we talk about is individual involvement at our firm, trying to encourage our team members to get involved at a charitable organization and lean into it, whether that's an educational organization, such as the Tennessee Society, or a philanthropic organization like I do with Christian Recovery Houses, where we help men and women recover from drug and alcohol abuse through the power of Jesus Christ and the 12 steps. And so, at the end of the day, what we want to do as business owners is lean into our communities at this time and find some folks that are out there hurting, because there are so many people that really need our help, not only during this period of time, but it's important when we get to the other side of it that we realize that so many of the folks that we lean into that are hurting and need help, they don't need help just right now. They need help all the time. And that's one of our, I think, commitments as people that have been blessed, is to lean back into other folks and give back.
Well, fantastic. CJ, I can't thank you enough for your time this morning, and on a Saturday of all times, because I know you were very busy. Really appreciate this. To our XMC family, followers, customers, and those that hopefully will be customers in the future, we thank you for listening. We look forward to providing more expert moments from XMC. Everyone be safe and be well.